All right, let's get right into it because something truly wild just happened in the silver market. We're talking about a massive price surge that was stopped dead in its tracks when the entire market was just shut down. And it happened at the most critical moment imaginable. So today, we're going to dig into what went down, why it happened, and what this whole thing could mean for the future of precious metals.
It all started with this one number, $54. See, silver was on this incredible run, and it was just about to smash through this huge psychological barrier. This was the moment traders had been waiting for years. You could literally feel the tension building in the market. It was a historic moment about to happen.
And then, bam! Right at that exact moment, the CME's Globex platform, the electronic system where all this stuff trades, it just stopped. Poof. Trading in silver futures was halted. The entire market, frozen solid, right at the peak of the action. It's like a sprinter about to break a world record, and right at the finish line, the track just vanishes. That's what this felt like.
Now this is where it gets really interesting. Almost immediately, two completely different stories pop up. On one side, you have the official line from the exchange. Whoops, just a simple technical glitch. Nothing to see here, folks. But on the other side, a very different theory started spreading like wildfire among the traders on the ground, that this was no accident, that someone deliberately pulled the plug to stop the price from going to the moon.
And make no mistake, this wasn't some minor flicker on the screen. This quote from Analyst Garrett Goggins just nails the feeling at the time. A halt like this, especially during the thinly traded overnight hours, is a massive red flag. The message it sent to everyone watching was crystal clear. Something is fundamentally wrong. Buckle up.
The folks on the inside, they weren't buying it for a second. The skepticism was immediate and, let's be honest, pretty blunt. One market commentator shared what he heard directly from a trader on the floor. And the feeling there? Well, let's just say they thought the whole glitch story was complete BS. It just didn't pass the smell test for the people who do this for a living.
So why were they so skeptical? Well, from their point of view, it looked like this. Right before the halt, all the sellers had just vanished. The order book was paper thin. Then, one gigantic trade comes through and vacuums up every single sell order left. There was nobody left selling silver, period. So from their perspective, the halt was a timeout, a deliberate pause to let the big market makers catch their breath and stop the price from printing a number that would have been, as they said, off the charts.
So what happened when they finally turned the machines back on? Well, the price was immediately, and I mean immediately, hammered right back down. For a lot of people watching, that didn't feel like a random market move. It felt like the timeout had worked exactly as the traders' theory suggested it was supposed to.
But here's where the story gets so much bigger. This bizarre event in the silver market, it wasn't happening in a vacuum. To really get what's going on, you have to pull the camera back and ask, was this just a one-off thing, or was the entire precious metals complex blinking red at the exact same time?
Oh, it wasn't even close to an isolated incident. When you zoom out, you see this pattern of seriously strange events all happening at once, which suggests the problems were way deeper than one little glitch. Let's look at the investigator's file. First, you have the silver halt. At the same time, gold suddenly drops 40 bucks, not once, but twice in these huge instant sell-offs that immediately snap back. And the cherry on top, the main exchange, the COMEX, fails to publish its daily open interest data, a report that normally runs like absolute clockwork. This quote just perfectly illustrates how serious this was. An analyst, Macro Liquidity, saw those insane drops in gold and said, look, that's not real people selling. Markets don't move like that. He said it's a sign that the system itself, the market plumbing, the pipes and gears behind the scenes, is buckling under extreme pressure.
So you have all this chaos erupting in the Western paper markets. But to really understand what was causing the whole system to buckle, you have to look away from the trading screens in New York and London. You have to look east. Because the real driver behind all of this is a massive squeeze on actual, physical silver. And this right here, this is the key. Physical silver stockpiles in China are now at their lowest point in a decade. We are not talking about numbers on a screen or paper promises here. We're talking about real, shiny metal in real vaults. And the trend is obvious. The stockpiles are getting incredibly low. The warehouses are literally being drained.
And all that pressure is building into what looks like a perfect storm. So right now, you have those decade-low stockpiles in China. At the same time, the entire global market is already in a deficit, meaning we're using more silver than we mine every year. And to top it off, China just announced it's going to start controlling its silver exports. You don't have to be a finance genius to see where this is probably heading. This brings us to the most important piece of the entire puzzle.
This whole story really boils down to a battle between two different kinds of silver, the paper promise versus the physical reality. You've got paper silver. Think of it as an IOU for the metal. It's just a contract on a computer. Then you have physical silver. That's the real deal. The bars and coins you can hold in your hand, driven by pure supply and demand.
For a very long time, that paper market has been the one setting the price, but that's all being put to the test now. And this quote just nails it. The exchange can hit the off switch on what is basically a computer game, but they can't stop someone in one country from selling a physical silver bar to someone in another. That market, the real market, it just keeps on going.
And hey, if you want to see the split between paper and physical happening in real time, you don't even have to guess. We have a live case study playing out right now. We just have to look at another precious metal, platinum. It's giving us a clear blueprint for what might be coming next for silver.
Just look at these numbers for platinum. The paper price on the COMEX in the West is trading at around $1,640 an ounce, okay? But the price for real physical platinum on the exchange in China, it's over $1,900.
That's a $300 difference for the exact same ounce of metal. This is not a small rounding error. It's a giant chasm. The physical market in the East is already screaming that the metal is worth way, way more than the paper price being set in the West. The disconnect is right there in plain sight.
And as analyst Hans Scherney points out, this is the blueprint. This huge price gap in platinum is exactly what happens when physical demand starts to completely overwhelm the paper pricing game. And the argument is that silver is walking down the very same path. This isn't some far-off prediction anymore. We can see it starting to happen.
And so all of this leaves us with one giant lingering question. We've seen the paper market can be shut down with the flip of a switch. We've seen the physical stockpiles drain to historic lows. We can see other metals already showing this massive price split between East and West. So when that paper promise and the physical reality finally have their collision, what is the real price? That's the question at the heart of everything right now.